So here we go, another week of earnings, and it is just about as crazy as last week. Last week was bonkers. We had some small caps, we had the mid caps kind of flying up, we had the big tech absolutely collapsing apart from Apple, and we needed a couple of days at the weekend just to calm everything back down and get ready to go for another week of earnings. And here we go, it's another busy one, and today I'll spend a minute or two and talk about some of the stocks that I'm watching going into earnings, so I hope you enjoy the video. Now just to let you know, if you are on the Patreon, I did a drop exclusive video a few hours ago which was a review of earnings from last week, and I just talk about some of the stocks I own, well the stocks that I do own, and a few ones that I'm watching or I'm interested in and their earnings. So if you are on the Patreon, go check out that exclusive video. If you're not on the Patreon and you want to see the exclusive content, the link to join is in the description. I also post what I'm buying and selling in real time on there. But let's get stuck into this week's of earnings, and like we said earlier, it's another crazy one we've got going on here. So a bit like last week, Monday's the day to kind of catch your breath a little bit. It's not too much of a busy one. The other one that I would really keep an eye on is Arista Networks. It's a stock that I've actually tracked for a while, but I'm not really anywhere close to buying it. The next, well, moving on to Tuesday. So first of all, SoFi. I know this is a really popular stock with the retail investors. A lot of retail investors are owners of this. I know quite a few of you guys own this stock. I can't remember, we did a SoFi video. I can't remember if it was on the Patreon or if it was on the YouTube. It might have been on both of them, I don't know. But we did talk about it, and it's been a stock that I've been looking at for a while. I did some research on it. I was actually quite interested in it after I looked into it. It was a SPAC. It got absolutely killed off, lost 50% of its value. It's down at 5 billion market cap. And yeah, I mean, the business, I mean, if we look here, they're actually forecast to grow 56% year over year, which is really impressive. And yeah, I'm following this one. It looks like a really nice business, the complete business model where it has a lot of sectors that are going on. Obviously, there's a little bit of the issue with the student loans at the moment going on. The only other little thing that kind of puts me off is the profitability, and if it can start moving to profitability, that could be a bit of a driver that pushes me off the edge if I can see it not burn through as much cash. So yeah, I think this is a really good stock to be watching. I think it's, like I said, it's just a little bit too early for me, but if we give it another year of financials, it still grows, it starts pushing towards that profitability, it could be one that I'm quite interested in. So yeah, I'm watching this one. I don't think I'm close to really owning it, but give it 12 more months and a bit more progress, it could be an interesting one, especially if it stays down at $5. So yeah, I'm watching this one because I enjoy following this stock, and potentially further down the line when it matures a little bit, it could be one that I do own. And then we move into Uber. They're reporting earnings. I know a few of you guys potentially could own Uber. Pfizer, BP, those are some of the big ones on the morning. On the afternoon or the close, we have first of all AMD. AMD is going to be really interesting to watch because it's been killed off quite recently, especially as like the likes of Nvidia have been dropping quite a bit. AMD has been dragged down. Now I did look into AMD's earnings, or what they're forecast to do, and they're actually expecting a decline in EPS, but they're still expecting revenue to be up 29.5% this year, which is absolutely crazy in this quarter, because when you look at the weakness of, say, Nvidia, for example, or even someone like Intel, so we're still putting in quite decent earnings at the moment, and your stock's been absolutely demolished. That's quite interesting to be watching. So AMD is very much in the same sort of boat as like SoFi, even though I'd say AMD is obviously a more mature company. It puts in a lot more amounts of profit. Well, it makes profit to start with, and it does put in a good amount of profit. So I'm looking at AMD and watching, okay, these are quite high earnings. I mean, if they deliver, that'll be absolutely amazing, but could they potentially be a bit below, you know, when you look at the weakness of Nvidia, for example, and potentially could we see a drop on AMD where we start pushing into the $50 range? So yeah, SoFi is a stock that I'm watching for 12 months time. AMD is potentially a stock I watch into 2023, see if the weakness kind of continues in AMD, and if it enters a pretty decent price, potentially it's one that I look at picking up. But yeah, so I'm just going to keep an eye on that one. Next up is Airbnb. So Airbnb is a stock I've been looking at since the IPO. Came on at $139. I was like, okay, that's a bit of a rich valuation. I'll see what happens if it goes a little bit lower, if it has the IPO slump that a lot of IPOs tend to have when they do come public. It didn't really do that. It held up quite well. And even when we go into the 2021, when the market basically tanked, I mean, it was $206 and it is now down 44% to $115, but it's not as bad as what a lot of other stocks have been killed off. So I would say it's actually held up quite well in this period of time. Now the thing is that since it IPO'd at $139 and it's now $115, it is down 17%, but what has happened in that kind of 2-year period is that the share price has basically stayed stagnant. But if you look at the financials of Airbnb, they've been going like that. They've been really nicely ticking upwards. But the thing is because the financials have been ticking upwards and the valuation has stayed, or the share price has stayed the same, a lot of the valuation has dropped quite a bit and it now trades at 62 times earnings. So that obviously is a little bit rich, but if you're paying for more growth, then it is going to be a little bit richer. So the big question I always had with Airbnb is what growth is it going to give me if I'm an investor into the business? And at the moment they're expecting 24 to 29% and they're also expecting EPS to grow 18%. So these numbers are really good. Now my only question for Airbnb is that it's kind of come off this kind of boom because of the lockdown situations and then everything opening back up. What are the numbers that Airbnb is going to be doing in a solid, economic environment and potentially a little bit of a slowdown or a recession? Now at 62 times earnings, if Airbnb comes in with, like 14%, 15% growth, which analysts look at the moment to be forecasting, I don't know if that justifies the valuation. I mean, it's fantastic growth, but then does it justify the valuation? If it carries on putting these numbers in, then I think it does. If it doesn't, I don't think it justifies the valuation. So I'm very keen at watching. I'm watching Airbnb very close at the moment. The big thing for me is seeing what the long-term guidance is and what growth they're offering in the long term, and then I can justify, is it worth paying up this premium that it's trading at, or is it not? So that's the key thing for me with Airbnb, is getting some long-term growth projections off them and potentially some guidance going forward. But saying that, they might not give any guidance just yet. They might leave it until February time when we get Q4 numbers. So that's that one. Next up, Etsy. So this is a bit of a e-commerce play. I'm sure most of you guys know the platform, potentially use the platform. 12 billion company, you'd think that Etsy would be a little bit higher. 34 times earnings, and this stock has been devastated. Well, a lot of stocks have, but this one as well. $291. It did lose in the peak 75%. Recently bottomed like a lot of small mid caps around that June-May time, and it is up 30% since that time frame. And many of you guys might know, I'm guessing it's probably the only guys on the Patreon, I was very much watching Etsy in this time frame. Once it dropped below that $100 range and it started going lower, 90, 70, 60, $67 was its 52-week low. I was really watching Etsy, and I actually had a little bit of a deep dive into Etsy and thought, okay, is it time to be buying this stock? And everything I found with Etsy, I actually really liked with it. There was really only one big concern that I had around Etsy that really did put me off, which was the balance sheet. And they really, since 2019, have started loading up the debt. Now, there's not really anything wrong with loading up on some debt if you use it correctly and then potentially you pay it down. The problem with Etsy is that they loaded it up quite a bit in 2018, then bumped it up because of the CV times, and then coming out of 2020, when the platform was doing really well and potentially was the better time to be kind of paying down some debt. And then recently in the summer of 2021, they loaded up the debt once again. I think that was to do with an acquisition of Depop, I believe it was. And then it loaded up to 2.2 billion in debt, which is really, really a big amount of debt. And especially, they've got a good cash balance around 1 billion. So, it's not like the business is struggling at all financially. And I believe they're still putting in, decent amounts of profit as well. My other problem is it was quite a high debt balance, and that kind of did put me off it. I guess one of the other little things that did kind of put me off is that you do look at the business and it is kind of 34 times earnings, and I think if we go for the last quarter, it grew 10%. So, I don't know where it's going to balance out in the longer term on growth numbers, but if it's still around 10% at 34 times earnings, I don't know if that is a little bit too rich. I don't know, but that's what ended up putting me off it. But I've been watching it. I think long term it will be a very good company, but that's the reason why I didn't buy it anyway. So those guys report earnings. Next up is PayPal, obviously one that I own. I'll be interested to see what these guys do. The first kind of quarter where they don't have the tough eBay numbers. The only problem is that they obviously going to have some impacts because of the FX headwind. So we'll see what these guys do. At the moment, analysts are expecting 10% growth from this quarter. Looking at the likes of Visa, obviously kind of different stocks here, but potentially they're okay. Shopify was okay, which gives you a little bit of, news there of what's going on. So yeah, we'll see what happens with PayPal. I think the last quarter was pretty positive, so we'll see if the positive momentum carries on here. I just realised as well, I did skip Roku, which is a stock that I'm not really interested in. I don't think they've got the most solid moat there. Qualcomm, Robinhood. Robinhood's quite normally a volatile one-off earnings. We've got Royal Caribbean on the Thursday. Crocs, same again, I had a bit of a deep dive into Crocs. I just looked and I thought the balance sheet was a little bit, personally for me, a little bit too ugly, and I didn't want to touch that. Datadog, Peloton, obviously they're having tough times at the moment. Nikola, Penn National, and then obviously PayPal that we just covered. A bit of a finance kind of few stocks here. We'll move to Coinbase, same again, a stock that doesn't really interest me. We then move to Square. So Square it's really important just to make sure a lot of their business solutions keep growing. Obviously, Bitcoin revenue could be all over the place and make the financials look a little bit of a mess. But as long as every other part of the business is still growing quite well, we'll see what happens with Square. That can be a bit of a 50-50 one, I think, at the moment. So we'll see what happens there with Square. And then after that, we've got MercadoLibre. So this is a stock that I've really only recently been buying in the last kind of couple of months. So I'm nowhere near the full position that I've built with MercadoLibre. The problem I have with it at the moment is last quarter, it was fantastic. They came out with a 10 out of 10 blowout earnings quarter. So I'm wondering if that momentum continues. I'm a little bit, obviously I want the momentum to continue, but if they bring out them numbers again, I can see, MercadoLibre stock exploding, and then I don't get to build up my position as much, which is a little bit frustrating. So I'm like, report as good numbers as last time, but can the stock go down? And that's the ideal situation. So we'll see what happens there. I mean, obviously, if they pull out another quarter like last time, that'll be absolutely amazing. But I still want to be buying, I still need a good, at least 6 months, I would say, to kind of carry on building this up to where I want it to be position-wise. So we'll see if that happens there. But I'm looking forward to that one. Then we've got Warner Bros. A few guys are in that one, I think. Twilio, Starbucks, Cloudflare. So that's a busy day. I'd say Thursday's probably, in my opinion, the busiest day of earnings. And then we move on to Friday. So first of all, FuboTV. This seems to be getting a lot of attraction recently on YouTube. I have no idea why, because I think it's the most terrible stock I've ever seen. But that's just my opinion. So it's a 670 million market cap. It used to be a $33 stock, and now it's a $3 stock. It's down 89% year to date. Now these guys are growing really fast at the moment. You can see here 69% growth. But after that, once you start digging into the company, it doesn't make really pretty reading. Now one of the first issues they have is gross margins at negative 4%. And I also noticed they actually do a really good job of hiding this in the financials. There's a reason for that. There's a reason why they're hiding this gross margins. Negative 4%, and that puts them down at a negative profit margin of 55%. Basically, this product runs at a loss. It's a terrible business. If you have negative gross margins, that is a really bad start, because for you to get to profitability is very much impossible, because that's before you even take any impacts like R&D, marketing and sales, G&A. You are going to struggle to make a good company, a profitable company, if you've got negative gross margins. It's very, very tricky. It's basically like me buying like a packet of sweets on the street, going to a shop, buy a packet of sweets for £1, and then going outside and saying, oh, do you want this packet of sweets? I just paid £1 for them. You can have 50p. And then, getting 50p and going, oh, look, I made 50p. It's not a sustainable business at all. So yeah, horrible gross margins on this one. You look at the growth. I mean, the growth's great, but look at the money they're burning through. 474 million. Next year is going to go up to 500 million, and even the year after, 2023, is 433 million. And you look at the financial health of the business. I mean, they're starting to load up on debt. No problem. No reason why, because they're running out of cash. You look at the cash. They're sitting on 372 million of cash. They've basically got 12 months to operate as a business. That's the problem. In 12 months' time, these guys are going BK. That's the problem. And the way they're going to either do that is by diluting shareholders, which I think will be really tricky when your share prices perform like this, or you raise more capital. And if you're a business like this and you're lending at this moment with the interest rates and your business is in this sort of state, I don't know who would want to lend you the money there. So it's getting a lot of attraction at the moment. It's getting traction on YouTube, and I have no idea why, because I am not a fan. And then the disrespect, right? The disrespect to put this above the king. This is the king. The king goes on top. this needs a swap around. This is the one to watch. So obviously DK are reporting earnings on Friday. Obviously, as always, I probably will do a video on the YouTube channel breaking down the earnings like I normally do, unless it's a pretty boring earnings. But with it being Q3 and one of the big quarters, Q3, Q4, maybe even Q1 sometimes, this is kind of the big one for DraftKings. So hopefully we'll get a lot more information what's kind of going on here. So I guess my initial thoughts going into DraftKings earnings this time round. What are my thoughts going in? Well, I looked 97% sales growth. I was quite surprised to see how strong analysts were expecting this this growth going in here. Now there is quite a wide range of estimates. So you see here the low end is 400 million. The high estimate is 460 million. So there's a big difference there. There's 65 million gap between the low end and the high end. So it's quite a big gap. So yeah, we'll see what happens. I think it's quite high expectations there. So if they do hit that is so impressive. I mean, if they start touching 100% revenue growth, it's just insane. Like, I didn't think we would see DraftKings touch another 100% quarter, but if it happens, obviously fantastic. Same on the earnings side. This is a bit everywhere. You've got the high side of 0.76. You got the average side of 1.05. You got the low side of 1.22. Same again. You've got nearly a 50-cent gap between these estimates, which is massive. I think how the market will react is, obviously revenue growth is important, but analysts or reactions on DraftKings don't really matter about the revenue growth. They seem to get really big on the EPS side of it. So I think this will actually be, the thing that actually moves DraftKings stock. And when you've got such a wide range, it could go anywhere. So we don't really know what it's going to produce. For me, the big thing is, obviously we want to see cost control, but if they still keep up the growth story, that's obviously the big thing that we have here. Going into quarter, one big thing is the hold rate. The hold rate looks pretty good to me. From the games that happened in the Q3, obviously it's quite volatile, but I would hope they'll come in the higher side. So that should help the earnings quite a bit. So yeah, we'll see what happens. Obviously, I think it will be volatile earnings as always. I think it will move double percentage figures on the day. I just don't know whether it'll be upside or downside. So yeah, obviously if we can come into the better side of earnings because of a hold rate, if we put in good growth, higher than expectations, 100% growth, that would be absolutely amazing. And yeah, we'll see what happens from DraftKings earnings. It's going to be another big one for the stock. So those are some earnings to be watching this week, guys. It's another crazy one, so I'm sure we'll be making some videos on these earnings like last week. Hope you enjoy it. Have a great week. If you can, hit that like button. If you're new, subscribe. That'll be absolutely amazing. And I'll see you on the next video.